When the economy starts showing signs of trouble, most people react emotionally. They panic, cut back suddenly, or wait until things get worse before making changes. But wealthy people often approach economic uncertainty very differently. Instead of reacting at the last minute, they usually prepare long before a collapse becomes obvious to everyone else. They focus on protecting cash flow, reducing unnecessary risk, increasing liquidity, diversifying assets, and positioning themselves to take advantage of opportunities when markets become unstable. Today we will talk about how the wealthy prepare before every economic collapse. So before we get started, make sure to hit that like button. Also subscribe to my channel 10. Most people react to economic crises too late. Every time the economy starts showing signs of trouble, most people respond the same way. They panic after markets fall, cut spending only after debt becomes overwhelming, and start thinking about financial security once uncertainty is already everywhere. By the time the average person reacts, much of the financial damage has already happened. Wealthy individuals often behave very differently. They understand that economic collapses rarely appear completely out of nowhere. Warning signs usually build slowly beneath the surface long before the public fully notices. Instead of reacting emotionally at the last minute, the wealthy often prepare quietly while everything still appears normal. 9. The wealthy focus on liquidity before crisis hits. One of the first things financially sophisticated people often prioritize before economic downturns is liquidity. Liquidity means having access to cash, or easily accessible capital, when opportunities or emergencies appear. During strong economies, many people overextend themselves financially because confidence feels high. But wealthy individuals usually understand that liquidity creates flexibility during uncertainty. When markets fall, businesses struggle, or assets become cheaper, people with available cash gain options while others are trapped trying to survive. 8. They reduce fragile debt before things get worse. Another major difference is how wealthy people think about debt during uncertain periods. They often try to reduce risky or unstable debt exposure before economic pressure increases. High-interest consumer debt becomes dangerous during recessions because income may become less predictable while repayment obligations remain fixed. Wealthy individuals often avoid becoming financially trapped by liabilities that depend entirely on perfect economic conditions continuing forever. They understand that survival matters first during unstable periods. 7. The wealthy diversify before panic starts. Many average investors diversify emotionally after crises already begin. Wealthy individuals often diversify earlier. They spread wealth across multiple assets, industries, and income sources because they understand that no single system stays dominant forever. Stocks, real estate, businesses, commodities, cash reserves, and alternative investments all play different roles. The goal is not predicting the exact future perfectly. It is reducing vulnerability if one part of the system weakens suddenly. 6. They pay attention to economic signals most people ignore. Wealthy individuals often watch economic indicators more carefully than the average person. Interest rates, inflation, unemployment trends, debt levels, credit markets, consumer spending, and central bank policies all provide clues about economic conditions. Most people only notice problems once layoffs, rising prices, or market crashes become obvious. By then, strategic positioning becomes much harder. Financially sophisticated people usually focus on early signals instead of waiting for public panic to confirm what is happening. 5. The wealthy prepare emotionally, not just financially. One of the biggest advantages wealthy people often have during crises is emotional control. Economic collapses create fear, uncertainty, and irrational decision-making. Most people panic because they were psychologically unprepared for instability. Wealthy individuals usually understand that volatility is part of economic cycles. Instead of reacting emotionally to headlines, they prepare mentally in advance. This allows them to make clearer decisions while others freeze or panic sell assets at the worst possible moments. 4. They position themselves to buy during fear. One of the most important realities about economic collapses is that they often create opportunities for people with capital and patience. Businesses become cheaper. Markets decline. Real estate prices weaken. Investments become available at discounts. Wealthy individuals frequently prepare specifically for these moments. While most people focus entirely on avoiding losses, the wealthy also focus on positioning themselves to acquire valuable assets during periods of fear and forced selling. 3. Multiple income streams become critical during downturns. Financially successful people rarely depend entirely on one income source during uncertain economic periods. Businesses, investments, rental income, dividends, digital assets, or multiple revenue streams create resilience. If one stream weakens temporarily, others may continue functioning. Most financially vulnerable individuals struggle because a single job supports their entire lifestyle. Wealthy people often reduce this risk long before recessions arrive by building systems that generate income from multiple directions. 2. They understand that economic crises transfer wealth. One reason wealthy individuals prepare so carefully is because they understand a difficult truth: economic crises often transfer wealth. People without savings, liquidity, or assets may be forced into desperate financial decisions during downturns. Meanwhile, those with preparation and capital can acquire assets, investments, or businesses at lower prices. Economic collapses are painful for society overall, but historically they often increase wealth concentration among those already positioned strategically beforehand. 1. The real secret. The wealthy prepare before fear becomes obvious. The deeper difference is timing. Most people only prepare once fear becomes visible everywhere. Wealthy individuals often prepare quietly long before public panic begins. They build liquidity, reduce unnecessary risk, diversify income streams, strengthen financial flexibility, and position themselves psychologically for uncertainty. They know economic cycles are normal, even if timing them perfectly is impossible. Because the truth is simple: wealth is often protected and expanded during crises not by reacting faster, but by preparing earlier. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.